Can I start?
No, okay. Yes.
Okay. Okay. Thank you. The Banking, Financial Services and Insurance Board, in its quest for knowledge dissemination, has been organizing capacity building initiatives for members and stakeholders. We had organized the first series of Prevention of Money Laundering Act with great success. We would like to start the webinar with the Institute anthem.
Shall I start now, madam?
Uh, so just hold on a minute.
Okay.
Dubindu, could you do it?
I would request CME Chittaranjan Chattopadhyay, Chairman of Banking. I would request CMA Chittaranjan Chattopadhyay, Chairman of Banking, Financial Services and Insurance Board, to give his address. Sir, you're on mute, sir.
Very good afternoon to you all. We convey our extremely, we are very sorry that for some technical glitch, we could not actually start in time, but we equally appreciate your patience that you are all here. We could understand already more than 150 attendees are here. I beg to be pardoned for such a technical glitch, but I am very much thankful to my IT team because in spite of the fact that this is a holiday for the institute, our IT team has come out with immediate solution for us. So, ladies and gentlemen, this is a very interesting second session, second series rather we are going to have today, and really I am delighted at the appreciation outstanding response received for the first part of the webinar, Prevention of Money Laundering Act. I deeply thank CMA Dr. P. Sivarama Prasad, resource person of BFSI board, and our constant source of support and inspiration. In the first part of the continued webinar deliberations, there was extensive discussions on the regulations of anti-money laundering. The speaker delved in detail about the rules, which is a necessity to be complied by the reporting entity, namely putting in place appropriate risk-based systems and control with regard to its nature, size, and complexity. Now, in this second series, we'll be covering the following aspects of PMLA as I understand. Money laundering using bank accounts, money laundering using cash transactions, money laundering using investment related transactions, money laundering involving financial institutions, employees and agents, money laundering by offshore international activities, and money laundering by secured and unsecured lending. It's a very important aspects to be dealt by today. I request Dr. Prasad that today, since we have lost some precious hours, I understand that time is very precious to you also and for our participants. But however, considering the fact that is a very program which has been conceived by our BFSI board under your guidance, every member should be getting this this particular knowledge, because our role as CMS are vital to protect all stakeholders from potential threats and be as an enabler to fulfill the objectives of the government, Reserve Bank of India, and banks for educating through financial literacy and undertaking measures for awareness and suspicious transactions. We hope that all the participants benefit from this webinar and it will help them in their professional life. Any feedback to BFSI board is welcome in bfsi@icma.in. And we intend to organize the last webinar of the series of 3 webinars on PMLA on 7th October 2023 in the same time. So I request everybody to be with us, and I am again thankful to everyone for bearing with us for this inordinate delay due to the reason beyond control for IT glitch. Thank you.
So thank you very much, sir. Now I am
Sir,
okay.
so thank you, sir. Thank you for the address. Now I would like to request CMA Dr. P. Sivarama Prasad, who is a qualified professional in cost accountancy, company secretary, finance, commerce, insurance, and fellow member of ICSI, the Indian Institute of Banking and Finance, former AGM of SBI, and faculty of BFSI board to start the webinar. And sir, we are eager to hear your deliberations, sir.
Okay, madam. Thank you. Thank you, madam. First of all, from my side also, sorry for the inconvenience, because on account of technical problem only, this issue was delayed. The webinar was delayed by half an hour. So thank you for your patience also. So good afternoon to all. And the last webinar, I have discussed at length about the various aspects, particularly the suspicious transaction. Once the bankers or any entities identified the suspicious transactions, that is brought to the notice of FIU end. If at all the regulated entities or the bankers or financial, whoever is there, if at all they have not informed the FIU IND, then lot of penalties and a lot of consequences are there. That's why, first of all, being a practicing CMS, we should know about what are the various suspicious transactions. Today, the funds are routed to the banks. Okay. But some other people, they have switched over to the digital accounts, particularly the cryptocurrency, and other areas are also they are investing. They are diverting that amount to the various types of technological products that are available in the country, outside the country also. Not only that one, Digi lockers are also introduced. Some of the people, they have purchased the assets and they are kept in the Digi lockers. All these things are, there is a scope for the culprits who are diverting their funds. What are the various avenues that are available in the country? And in this class also, what the chairmen are told, I will discuss the cash transactions and other transactions, how the people are doing various transactions with the help of the financial system of the country. Suspicious transaction. Today that suspicious transaction, STR report. One side, earlier, the manual intervention is required to find out whether the transaction is suspicious or not. Today, with the help of technology, it is very easy to find out the suspicious transaction. Crores of transactions daily, it is happening in the banking system or financial system. With the help of technology, it is very easy to identify the suspicious transaction. The provision of Money Laundering Act, the rules there and there require every banking company to furnish the details of a suspicious transaction, whether or not made in cash, whether it is made in cash or non-cash items, that is brought to the notice of the FIUIN. Today, funds are moving through NEFT, NEFT, National Electronic Funds Transfer, or the particularly country to country, the SWIFT, Society for Worldwide Interbank Financial Transaction, RTGS, real-time gross settlement. So the wire transactions are also increasing, but whether that is a genuine transactions or not. With the help of technology, it is very easy to find out. Being a professional, what are the various types of transactions that are happening, particularly the suspicious transaction? Everybody should aware of it. Suspicious transaction means whether or not made in cash, which to a person acting in good faith. This gives a reasonable ground suspicion that it may involve the process or crime. Appears to be made in circumstances unusual, unjustified complexities. These transactions unusual, unjustified. Suppose I am a Mr. PSR Prasad. My salary in the bank is 1,50,000. If at all crores of transactions are routing through my account, then automatically the system captures and throws the STR report to the FIUIN. Appears to non-economic, rational and bona fide purpose. Whatever the suspicious transactions are there, it is no economic rational, not for the economic development, not for production, not for providing service, other than economic actors to disturb the country and money laundering using bank accounts. Today, all transactions, most of the transactions, that is 85 to 90% of the transactions of whether it is individuals or partnerships or sole trader or companies or LLPs are routed through the banking channel. But in that accounts, some of the people, they are opening multiple accounts. And some of the people, they are doing cash transaction, even though there is no scope for cash transactions in that business. Being a practicing CMS, if at all during the various types of audit or various types of services you are going to provide to your kind, if at all you find that this is a suspicious transaction, means that is the primary responsibility of a practicing profession is informed to the appropriate authority. That's why recently the PMLA amendments also, the CA or CMA or CS, these people also, whenever they are providing various services, if they found that a suspicious transaction, to the appropriate authority. Now, customers who wish to maintain number of trustee or client accounts which do not appear consistent with the type of a business. Why trustee account? Why number of accounts? What is the problem in running the one account? Today in the banks also, one company, they are opening nearly in the 27 banks. What is the need? Because the bad intention is there. Whatever the funds are there, whatever the unauthorized funds are there, that are routed to different accounts. For a genuine company, one account is sufficient. And some other companies, 27 accounts. How to find out the 27 account? If you go through the balance sheet in each and every account, particularly the assets side, cash or bank balance accounts, if you see the annexer, number of bank accounts are there in number of banks. So there is a scope in that particular company. Some unauthorized transactions, funds are routed through different entities. Customers who have numerous accounts and pay amounts in cash to each of them circumstances, which the total rates would be large amount. They are splitting, they are bifurcating the amount. Suppose if at all the amount is more than 10 lakhs, cash transaction is there, directly it will be reflected in CTR account, CTR report, cash transaction report, and that report goes to the FIUIN. What they are doing? 50,000, 50,000, 50,000, 50,000 transactions. If you count the total that transactions, it is much more than 10 lakhs per day, per account. Per account, if at all any cash transactions are there more than 10 lakhs, then automatically that transaction will be displayed or reflected in the CTR report. And directly at the end of the day, it goes to FIU IND. But what is happening? These people, okay, that CTR report goes, that's why they are splitting 50,000, 50,000 or 1 lakh or 1 lakh, 1 lakh, 1 lakh. Thereby, it will not be reflected in the CTR report. The cash transaction report means 10 lakhs and above transactions. Any individual or company whose accounts are virtually no personal banking or business related activity, but used to receive or disperse large sums. There is no business activity. That a person is also no sources of income. But if you see the accounts, lakhs, crores of rupees turnover. If you total it, the credits and the debits in a quarter, it touches a crores. But what is a source of income? We don't know. Because now some other aspects are under bank control. Some other aspects are not under the bank control. If at all you are transferring the funds through wire transfer from your internet banking through another internet banking on the another account through internet banking, how the banks are able to track this? Only the technology is find out this is a suspicious related activity, but used to receive or disperse large sums. They are not only receiving the amount, they are dispersing the amount, which have no obvious purpose or relationship to the account holder. A substantial increase in the turnover on that account. If you see, what is your profession? No profession, sir. Are you doing any employment? No employment, sir. But how they in your account lakhs of or crores of a turnover is happening? Business. It is small MSME unit. Turnover is also defined by the government. But if you see in that account, crores of rupees transaction. So that's why all these irregular transactions, with the help of technology, it is very easy for the financial system to brought to the notice of the FIU. Reluctance to provide the normal information. Some of the accounts they are opening. After that, the bank is asking some additional information. They don't provide. If at all they provide, then the bank will verify. Once verified, once it is found wrong information, and they will block that account. That's why reluctance to provide normal information when opening an account, providing minimal fictitious information. Sir, my unit is export oriented industry. Because once banks are giving a loan, then only we will visit to the borrower's organization or office, and we will verify the office, we will verify the records, we will verify the production department, we interact with the directors and all these things. Once the deposits, it is not possible. But it is possible with the help of technology. Whatever the suspicious transactions, the entities, the business firms are doing with the help of technology. Minimal or fictitious information. Because as per KYC, we will ask the basic documents. But whatever the other information is a false information, they will provide and sign. And when applying open account, providing that is a difficult or expensive for the institution to verify. Export oriented industry. My duty is to open the account, particularly the deposit accounts. My duty is not a CBI agent. As a financial institution, my duty is to open the account. That's all. But here, if you see number of accounts, But all these aberrations or whatever the suspicious transactions are there, all our system will capture and put it in the STR report, and the STR report automatically popped up or goes to the FIUIND. Customers who appear accounts with several institutions, cooperative banks or small finance banks or regional rural banks. Today, what is happening in the banking system or financial system is a target-oriented approach. They have to mobilize more deposits. In that process, if the customer is not providing sufficient information, then banks are also keep quiet. Why? Because their target may not be achieved. In that process, some of the people are involved in the process of prevention of money laundering act. Later on, if at all it is found and catch hold of by the enforcement directory, some of the bank officials or employees are also involved, particularly in the cooperative system, cooperative banks. They require funds for lending purpose. And if at all some officially valid document, OVD, official valid document, the regulator will tell officially valid document you have to obtain while opening the account. They are not obtaining. Simply they are opening. One good example I am talking. Only one example. 1 year back, I visited to one place in Andhra Pradesh, because that is a big branch, that is a chief manager grade branch. I wish to interact with the branch manager, because he is known to me. Then when I interacted with the branch manager, one person came and along with 2 or 3 people. Then the branch manager offered the seat and sir, what type of services I can provide to you, sir? Immediately he told, I wish to deposit 45 crores in your bank. Then branch manager is happy, utmost happy. Then he offered tea or coffee, drinks. No, I don't want to do and take all these things. Tell me. Immediately the branch manager given the list of documents for opening an account. One side branch manager, the face is glow and he is interested to open the account. But he has given the list as defined by the regulator, that is Reserve Bank of India, under money laundering. Whatever the KYC is, immediately this list is given. Sir, if you produce within no time, within 1 hour, I will open the account and whatever the checkbooks and all these things I will do. Immediately, what the response that the person, the branch manager received from that particular is, sir, I don't want to submit all these documents. I will put the funds and whenever I want, I will withdraw. I don't want to open this. I don't want to provide whatever the information you are asking. Then the branch manager put namaskar. Sir, that type of a deposit I don't know. I don't require 45 crores. Okay, my branch budget is 5 crores. My region budget is 45 crores. Definitely with this help of this deposit, I can achieve. But if enforcement directory catch hold of this one, then all officers of the bank will also involved in that particular transaction. That's why I don't want this 45 crores deposit like that. So today that is the situation. On account of a pressure, they are opening. But as a profession also, what my suggestion, it is a suggestion only. Whenever you find that is a bad, that they are doing wrong things, why can't you brought to the notice of the FIU? Sir, then I will not get any professional clients. I don't want other, I will not get any clients. Then automatically my profession will become down. Okay, If at all it is catch holder by the enforcement directory, leave it of the profession. Some other people they are the jail. So to avoid that one, the strategic and tactful and your skins to be saved. Your skin to be saved. Customers who appear accounts in several institutions within the same locality, especially the bank has a regular consolidation process from such a accounts prior to request of onward transmission of funds. This account to that bank account to another bank account, another bank. This chain or netting of transactions. But today, on account of core banking, within bank is possible, but bank to bank in due course, that is also possible. Matching payment without the matching payments out with the credit paid in cash on the same day or previous day. Why they are depositing and the same amount, why withdrawing, why not they out of the account, why not they transact that transaction to be completed. Same amount credited, same amount debited, same amount. If you see some of the accounts in the banks, particularly the corporates or LLPs or partnerships or proprietorship firms, same account debit and credit, same account debit and credit. Once the same account credit and debit is happening on a regular basis, the system will catch hold of that particular item and throws in the STR report. Paying large third-party checks endorsed in favor of the customer. The payee name is the payee name is not the customer name, but endorsement on the backside of the check, the name of the customer is there, is a endorsee. Endorser is other person. So large third-party checks are endorsed in favor of the customer. Suppose the payee name is XYZ. XYZ endorsed to another person. Finally, the check was endorsed in favor of Mr. PSR Prasad and the check is deposited in bank. Then I am also involved in that particular transaction. So paying large third-party checks endorsed in favor of the customers. Large cash withdrawals from previous dormant account. That's why recently the Reserve Bank of India, they have given directions or guidelines to all the banks and even public announcements also. Whatever the dormant and inoperative, earlier all dormant accounts and inoperative accounts are with the banks only. Today, after 10 years, that amount will be transferred to Reserve Bank of India. And they will use that account is now called as a DEF, DEAF. They will use that funds, Depositors Education Awareness Fund. Like dividends also, unclaimed dividends are there. Unclaimed dividends are to be transferred to the Government of India account. In the similar manner, 10 years and above account, 10 years no operations. Some other people, black money, they are putting in the account and no transaction. And after 1 year, the account will be turned into dormant, and after 2 years, the account will turn into inoperative, particularly in the savings bank. In case of current account, 6 months and 1 year. But suddenly in the inoperative, crores of rupees are coming. And cash withdrawals from the previously dormant inactive account, from account which just received unexpected large credit from abroad, foreign funds. This is a suspicious transaction. System will catch hold of. Even as an individual, I may not identify it is a suspicious, but the software that is developed in core banking system catches the transaction, put in the suspicious transaction report, STR report. Even enforcement director also, they will verify all these things based on the enforcement directory investigation. These are the various findings. Customers who together and simultaneously use a separation to conduct the large cash transactions or forex. Customers who together and simultaneously use separate accounts to conduct large cash transactions or foreign exchange transactions. So here, whatever the systems are there, always the culprits are thinking in a different manner. But on account of technology, this is not a difficult task for the to identify the suspicious transaction. Greater use of safe deposit facilities. Some of the customers they are asking big lockers. Big lockers. In the big lockers, if you open if enforcement directory people are opened that locker all earlier, not now, earlier, today is the last day for the 2000 rupees notes. Earlier, some other lockers are flooded with the 2000 rupees notes. In the lockers, because banks are providing a big lockers also, because that is a fee-based income to the bank. They thought that whatever the documents and gold and other valuables, if at all it is, they wish to put in the lockers. But if you open some enforcement directory opens the locker, lot of cash is there. That is also a suspicious transaction. They are not only using the bank accounts using means then automatically the amount will be go to the STR report, but they are putting in the lockers. Greater use of safe deposit facilities and increase the activity of individuals and use the sealed packs deposit and withdraw. Some of the people they put the sealed packets and they are coming because here whenever they are operating the lockers, we don't have any control. We will open the master key, come back. Today, locker systems are also automated like ATMs. Whenever they are going to enter into the locker room, insert the card and give the pin, automatically door will be open. You are going inside and insert the card, your locker will be carried by robo. And that is ICICI Bank, they have implemented in different parts of the country. Automated digital lockers. If the locker size is big, there is a scope for suspicious funds. Company representatives avoiding contract with the branch. Sometimes on account of this suspicious transactions, we want to verify with the company authorized officials. No, they are not available. Once or twice we will issue the notice. If they are not answered, then we will inform to the appropriate authority. There is no other way. Otherwise, we will also include, we will also one of the party in that suspicious transactions. Company representatives avoid contract with the branch. At the time of opening, they will give my managing director or chief financial officer authorized persons to withdraw the money, to issue the checkbook, authorize like that. But if at all any this type of transactions are happening, if you wish to contact the company top people, avoid to contact, avoiding to contact. Why? Because if at all I raise a question, they may not answer. Immediately I will brought to the notice of the appropriate authority. Substantial increase in deposit of cash or negotiable instrument by a professional firm or company using clients' accounts. This is also bad habit. Instead of their company's account, they are using client's accounts also, or in-house company or trust accounts, especially if the deposit are promptly transferred between the other client company and trust accounts. That's why trust account means it is a red signal to the bank. Reserve Bank of India being a regulator, they always told while opening the trust account, be cautious and be verified. Non-governmental organization, no profit, no loss organization. We are talking NGOs, there is no profit, no loss like that we are talking. But in the real sense, that is a dangerous accounts, particularly from the financial system point of view. Customers who decline provide information that in normal circumstances would make a customer eligible for credit for other banking services that would be regarded as a valuable banks. And some other people, crores of rupees turnover is happening in the current accounts. And banks are giving a lot of importance. He is a valuable customer. Once valuable customer means not based on the amount. Fulfilling the requirements for opening an account is called valuable customer. They have to adhere the accounting opening system, whatever the accounts they are going to open, they have to follow the guidelines of the bank in total. If they are not followed, then they are even though they are giving a crores of rupees of business, he is not called as a valuable customer. Insufficient using normal banking facilities, avoidance of a high rate of interest facility. One account is there, one person in the bank, bulk deposits are there. Bulk deposit 1 crore and above is called bulk deposits. We will offer higher rate of interest. But he wants to put in savings bank account. Array, we will ask at the time of deposit, we will ask how long this deposit will continue. It will continue another next 2 years. Then you put it in bulk deposits, then you will get 9%. Why you are putting in savings bank 2.7 rate of interest? Then there is no answer. There is no answer. Insufficient using normal banking facility, avoidance of high rate of interest facilities for large balances. I don't want that 9%, this 2% is sufficient. Today, if at all it is a commercial organization, always they will aim for to increase their revenue by investment. This is also investment. That he is getting 7% difference on 1 crore means it is 7 lakhs. And if at all they put in 10 lakhs, 70 lakhs, they are ready to sacrifice that amount means this is not authorized transaction. So that's why insufficient use normal banking facility, avoidance of high rate of interest facilities for large balance. Large number of individuals making payment in the same account without adequate explanation through online or offline. Suppose my savings bank account is there. In my savings bank, 1,000 rupees each person transferred, then it is a suspicious transaction. My savings bank is my revenue, that is my pension, plus whatever the other income is there on account of interest on that is only. But why this is happening? Large number of individuals make payments in the same account without adequate explanation. They don't tell why you are routing that much amount. Number of transactions. That too small transactions, all are to be treated as money laundering activities, money laundering transactions. These are all called money laundering. Earlier, before implementation of technology, money laundering is maybe easy for the culprits, but today it is not a difficult task for the financial system to find out the money launderers through STR reports. That to technology, virtual digital assets. Virtual digital assets are increasing in India also. Even I interacted one gentleman who is known to me. He is in army. He is having cryptocurrency account. I told, once you want to increase your wealth, whatever the authorized revenue is there, savings are there. There is so many alternative available, investment alternatives available in the country. That too, it is giving a yield. Why you are opening unauthorized, unregulated cryptocurrency? There is no answer. Virtual digital assets are increasing in India. Virtual digital VDS. With the increasing popularity and adoption of virtual digital assets in India, there is a need progress regulator framework that can establish India's leadership in virtual digital assets space. Now the government, not only government, even worldwide also, money laundering activities will increase on account of VDS. Terrorist finance will increase on account of VDS. Instability of the country will happen with the help of VDS. Some of the developed countries also told to IMF, International Monetary Fund or World Bank wing, they clearly told VDS are danger. It encourages the instability of the country. And the terrorist finance, all these things, bad elements will happen in the country on account of VDS. Virtual digital assets, to put simply, digital holding that has been encrypted on the blockchain, enable anyone confirm to authenticity, determine who owns it. Today, some of the film stars, they are having all film stars, they are having a cryptocurrency accounts. Some of them are declared, some of them are not declared, like that. So the virtual digital asset, put simply, the digital holding. Once the CTR report is happening through bank transactions, then they are using other channel, that is a VDS. So that the government may not catch that particular funds. No, even PML Act latest instructions, that is also under scanner of the government of India. Scanner of the government of India. So virtual digital asset, to put simply, the digital holding that has been encrypted and blockchain, enabling anyone to confirm its authenticity and determine who owns it. The unique asset may be they can purchase, they can sold, they can transfer. Today, cryptocurrency is also happening like that. Whatever the unauthorized money is, they are using in the purchasing cryptocurrency. When they require, they will sell, and they are using that money across the globe, not in India, across the globe. And if they want to transfer to anybody, that is possible. But earlier, that is not a scanner, that is not a scanning by various governments. Today, that is also scanning under scanner. Since a non-fungible, which means it cannot be replicated, copied or hacked, because on account of a virtual the digital asset VDA cannot be replicated, copied or hacked. Examples of VDAs are cryptocurrencies. Everybody knows about that one. Non-fungible tokens are also there, or decentralized finance. These are the three areas in VDS, and people are investing in this three areas widely. Whatever the black money, whatever the unauthorized money is diverted from the banking system to this one, which creates a lot of problem to the economy in the coming days. So that's why now the scanner is there. Government is also closely monitoring this account. If I am talking about a STR report, suspicious transaction, no, some other people they are suggesting, why can't you use a crypto, why can't you purchase a cryptocurrency? Then government of India will not catch hold of those people who are invested in cryptocurrency. That is not correct now. Cryptocurrencies, digital currency that is used encryption technique to secure transaction and control the creation of new units. And the non-fungible tokens, that is another mode of investment, particularly unique digital asset that use blockchain technology to verify ownership and authenticity of the digital content, such as artwork, as music or videos in different forms. That is also asset. Cryptocurrency is also an asset for the individuals who invested. This is a non-fungible tokens are also one type of a mode, because it is a technology developed. But so far they not focused on this. Attention is not made. Now Government of India is also now they are focusing on this area. Where people, some of the culprits, no, if I am using this mode, they will catch hold of me. If I use this channel, they may not catch it. No, that is wrong notion. Decentralized finance, DeFi. This is also another type of asset creation with the help of unauthorized funds. Laundering amount, whatever the money laundering is there, they are diverting to decentralized finance. DeFi refers to a range of financial applications built on blockchain technology that aim to provide a decentralized and permissionless access to financial service, such as they can borrow, they can lend, they can trade. All these things are there. Worldwide, DeFi or a cryptocurrency and this non-fungible tokens are importance is now attention is made by various countries in this area also. Otherwise, the stability of the country will lost. Growing popularity of the virtual digits across the world. But now scanners are there now. Once it is scanned to the individual, then it is very easy because of technology. As I told earlier, central bank digital currency, which was implemented in India with effect from 1st November, wholesale transaction, 1st December, retail transaction. And if I want, I can suppose I require CBDC. I can go to I can download that particular CBDC wallet is there in the Google Play Store. and I can make a request to the bank, my please debit to my account 1 lakh and give the 500 denomination of CBDC, central bank digital currency. They will give 500 digital currency with the prefixed numbers and all this. Once they have given, then automatically it will be recorded in the server of the Reserve Bank of India. That Mr. Prasad, these denominations are purchased. Once I have given that amount to another person, another wallet, then automatically my wallet is debited and another wallet is Gopal the transferred. And Gopal to Hari, like that n number of years if you want, how this 500 note is transferred from one person to another person. That is the beauty of the central bank. Once a CBDC is full-fledged implementation happened, then there is a PMLA, particularly prevention of money laundering activities, can be the money laundering activities can be curbed to a large extent. And this is an evidence is also for the courts also. They will take the registry copy of the Reserve Bank of India, certified registry copy of the Reserve Bank of India. Growing popularity of the virtual digital assets across the world. VDS are grown, diversified substantially since Bitcoin was first launched in 2009 and have already severe different purpose in the economic functions. These Bitcoins are using for different purposes. Most of them are bad purpose. Global cryptocurrency market size is 910.3 million 2021 and projected to the annual growth rate, combined annual growth rate is 11.1% during 21-28. The NEFT, particularly non-fungible tokens, what I discussed earlier, worldwide is projected to grow 18.55 23-27, resulting market volume of 3,162 million by 2027. Once the government is initiated or focused on the financial system of the country, some of the people, particularly those who are launderers, money launderers, they are using the other mode of the transactions. But there also, it is a very easy to find out that particular transactions also. VDS in India and India. Popularity of the digital currency and virtual digital currency are on rise in India, even in our country also. As per United Nations Conference and Trade Development Report in 2022, India ranked 7th in the list of countries ranked as per digital currency adoption, with 7.3 of India's population owning a digital currency in 2021. So in India also, the VDS are increasing trend. Thereby, the money laundering activities are also increasing trend. India ranked second in the list of 20 countries with the highest cryptocurrency adoption rate. According to Chain Analysis 2021 Global Crypto Adoption Index with a growth rate of 641 over past year. Now, once I'm talking about STR report and CTR report and financial system, the particularly CBS environment catch hold of the money launderers, then they have stopped this channel and they have opened the another channel like that. Prevention of illegal activities. Crypto assets have been associated with illegal activities such as money laundering, terrorism finance, and tax evasion. Tax evasion. Once it is routed to the bank system, definitely income tax department catch hold of the particular person. Only one example I am quoting here. I have given a gift of 5 lakhs to my daughter during marriage. My daughter is not an employee. And in the income tax account of her account, then one message came. 5 lakhs source of income. What is the source of income of 5 lakhs in your account? Because it is there in the bank deposit. Immediately, I replied that one. Income tax CPC Bangalore, they raised that one. Immediately I replied, sir, because on behalf of my daughter, I replied that one. Sir, my daughter given a gift of 5 lakhs for that particular marriage function which was held on so and so. If you want, we will provide the marriage wedding card also. Then the complaint is closed. Today, all financial transactions, it is very easy on account of anywhere banking or core banking system. Imagine in the coming days, all bank servers can also be clubbed. Then if it are people are opening in different banks, different accounts, it is very easy to consolidate and to arrive their total source of income as well as other areas. So the prevention of tax in 2021, illicit transactions using cryptocurrency were estimated 14 billion, 79% increase from 7.8 billion the previous year, according to blockchain analysis and chain analysis. Financial stability. The growth of digital asset market raised concerns about the potential impact of the financial stability. They can damage the financial system of the country also. Once the digital assets are increased, they can destabilize the country economy, the economy of the country economy. Regulation can also help mitigate the rise, setting standard for conducting of the market participants. Even we are talking about capital market, we are talking about money market, we are talking about commodities market, we are talking about forex market, we are talking about various financial system including banks. Once the digital assets are there, if at all it is not properly regulated, not scanned, then economy will collapse. New rules are brought under cryptocurrency or virtual digit. Government of India started. New rules brought under cryptocurrency and virtual digit under the ambit of anti-money laundering law. Even once a savings bank is debited and transferred to cryptocurrency, straight away that report will go to the FIUIN. My personal attention is not made. Without my intention, the system is automatically populated or transferred that one as per new rules. Entity dealing in the VDS will now consider as a reporting entity under the PMLA. So once the people are thinking they are intelligent, means the government is much more intelligent than the people. The brainstorming and in the economy, what is happening, different people, the person who knows one system, he is thinking that he is a great person. Government knows the different systems and worldwide system also. As per new rules, an entity dealing with VDS will now consider reporting entity under PMLA. The amendment requires intermediaries in crypto ecosystem. Now all intermediaries are brought under the scanner of a PMLA, such as crypto exchanges, wallets, and other service provided to establish and implement of a PMLA measuring and systems, and separate rules and regulations are defined in this area also for VDS. So the amendment will require intermediaries in the crypto exchange ecosystem also. If at all the people are moving another system, government will also move to another system. Wherever you go, Hutch follows. One slogan is there in business, particularly on a telecommunication service provider. In the similar manner, PMLA, if at all money laundering activities are there, government will also follow whoever is doing that type of, and they will catch hold of that particular person at any cost. The enforcement directorate, who is handling the PMLA, they are having much more intelligent than the individual like us. Measures to include conduct a KYC checks during the customer onboarding, retaining the customer data for a specified period, monitoring the data, reporting the data, suspicious transaction, and having the policies for tracking transactions. Even cryptocurrency also, how that amount is moving from one account to another account, for what purpose? Then wherever you go, Hutch follows. Definitely, this is also one of the latest developments. Videos are also brought under the scanner of PMLA. The videos, like I told about the three different types, all are covered under VDS, virtual digital assets. Transaction related to cryptocurrency and VDS are covered under PMLA. Converting virtual digital assets into fiat currencies, vice versa. Indian currency, fiat currency means authorized currency of the country. Authorized currency to virtual currency, or virtual currency to authorized currency of the country, then tracking mechanism is there. Exchange one or more forms of virtual data assets, digital assets, transferring virtual digital assets, and securing strong managing virtual digital assets, providing financial services related to sale of virtual digital assets by a nation. All these are covered under PMLA. Now coming to, earlier I told about bank accounts, how the culprits or money launderers, they are using bank accounts, and bad money they are converting to good money with the help of a banking system. Now what type of cash transactions they are doing? For that, money laundering using cash transactions. Money laundering using cash transactions. Unusually, large cash deposits are made by an individual or company whose superficial benefit business activities. That's why in every account, the bankers has to mention threshold limit. What is a threshold limit? While opening the account, based on the interaction of the borrower, based on the document and what are the profession, what is the activity, or whatever, whether he is an employee or not, based on that the threshold limit for this person. Suppose I'm Prasad. Suppose I'm in bank as a AGM. My salary is 1,50,000. They will add a double amount per month, 3 lakhs. If more than 3 lakhs transactions are there, definitely system will hit that threshold limit and goes into the suspicious transaction. Superficial business activities would normally generated from check and other instruments. Large cash deposits. Today, more than 20,000, we are not giving any cash, or 50,000, whatever the limits defined by the Reserve Bank of India, the income tax, government of India. And payments are also to be made by the company today, all our online systems, either NEFT or RTGS, etc., etc. But why the company is using cash transactions? What is the hidden agenda? One example, in one state in the country, whatever their sale process are there, all are cash transactions. They are avoiding the GST, and they are avoiding to pay the tax, other taxes, etc. One state in the country, if you see the total transactions, the transactions are, that is in the paper statement. I am talking about the paper statement, based on the paper statement. All transactions are cash. Once the digital space, digital India, and everybody, even a coconut vendor is also using QR code or a Paytm or other Google Pay, etc. What is the need of cash transactions, and that too insisted by the state? Substantial increase in cash deposits of individual or business with apparent clause, especially such deposits are subsequently transferred within a short period. That's why some of the accounts, particularly one report, is also generated in the core banking. Quick mortality accounts. What is meant by quick mortality accounts? One money launderer is there. The money launderer, he opened the account, crores of rupees are transferred, and then he closed that account. He is thinking that nobody has seen me like that. He is already closed, and whatever complete closing of the account, and he will open another account, and whatever the irregular transactions are there, he will route it and close the account. But core banking system will generate the quick mortality account and the suspicious transaction. Open the account on 5th, closed the account on 10th. What is the need for 5 days? That too in that account, crores of rupees transactions are there. Only 1 week they will open, or 2 weeks they will open the account, or 3 weeks they will open, or maximum 1 or 2 months they will continue. After that they will close. All these things the system will capture and send under the suspicious transaction. Because these are given by some people, advisory service or consultancy services. Today, the technology is gives whatever the bad elements are there, it is brought to the notice of the appropriate authority. Transfer within a short period out of the account, destination not normally associated with the customer. They are receiving, they are paying, they are closing, they are opening n number of accounts. Suppose under my PAN number or Aadhaar number, how many accounts are there in various branches of State Bank of India? 23,000 branches. Immediately the system will displayed all the accounts. Mr. Prasad is having a account here, this branch, that branch, like that. If all banks are combined, servers are combined, this bank, that bank, this bank, all it's possible. Because of the base for opening account is Aadhaar card as well as a PAN card. Even today, while opening the account also, some other people, they are manipulating the Aadhaar card and PAN card. Suppose they are manipulating. The core banking system is linked to other server, and core banking system of the banks is linked to PAN card server, UTI PAN card server also. Once I have given, once the bank is given Aadhaar number, the photograph of the Aadhaar is displayed on the screen of the banking system also. Once I have given the PAN card, the name, all particulars are displayed. Some of the people, they thought they are giving a wrong Aadhaar code number, and they preparing one Aadhaar card and give it to the bank xerox copy. Once the bank is giving that number in the concerned field, then automatically name will be displayed. That name is Venkat Rao. That PAN card number is related to Venkat Rao. If at all the Prasad is opening, then automatically the name mismatch is there. The checks and cross checks are also there in Aadhaar as well as the PAN cards also. And in due course, the DigiLocker system is also linked to the banking servers, DigiLockers. So substantial increase in the cash deposits of the individuals or business without apparent cost, especially if such deposits are subsequently transferred within a shortest period out of the account and a destination not normally associated with the customer. Customers who deposit the cash by means of numerous credit slips. If at all 20,000 or 50,000 above cash transactions are captured by the system in STR report, then they will split into 5,000, 5,000, 5,000 cash slips. The total of each deposit is unremarkable, but the total of all credits are significant. Each deposit is unremarkable, 5,000, 5,000. If at all it is 50 lakhs, sometimes this type of incidents are also there. Company accounts whose transaction, both the deposits and withdrawals, are denominated by cash rather than other forms. Why companies are accepting cash? Today, almost all colleges, business organizations, all are online transactions. Why cash transaction? So create a normal associated with the commercial operation. Why not checks? Why not bill of exchanges or other modes of this one? So this type of transactions are also catch hold of by the system. Customer who constantly pay or in deposit to cover the request of money transfer, bank drafts, negotiable and readily marketable money market. Some of the customers to purchase the demand drafts, they will pay the cash. Even if the cash is more than 50,000 for the demand draft, they have to attach the PAN card. And today the Reserve Bank of India also clearly mentioned the name of the applicant to be printed on the demand draft. All banks under KYC AML. So it is a very difficult for the unscrupulous persons. So once one person is purchased earlier, only the payee name is there. The payee name, pay to so and so. Now today on the top of the draft, applicant name is also to be printed. That is the directions of the Reserve Bank of India. Who is applicant? What is his PAN number? The PAN is to be attached for the taking the drafts. Some of the people, they are holding the funds in the demand drafts for certain time. for certain time. Earlier, particularly the black money, those who are having the black money, they are holding the black money in rupee traveler checks of the banks. Today, rupee traveler checks are not there. Traveler checks are not there. They are holding that money in the demand drafts as well as the traveler checks also. Customers who seek exchange a large quantity of low denomination notes for those higher denomination. Why the party is having higher denomination? Today, in the core banking system, what denominations the deposit is giving, all are completely recording is there. If at all I am giving 1 lakh and 500 notes, Prasad is deposited his account 50, the 500 notes this much denominator. All denominations are captured by the not note numbers, all are captured by the system. Frequent exchange of cash into other currencies. They will pay the cash and they will ask a Vishwayatra card, particularly other currencies, either dollars or pound sterling or Dutch marks, whatever the Japanese yen or Singapore dollars or Australian dollars like that. Branches that have great deal more cash transaction than usual. Even one report will be generated by the system and goes to the controlling authority. Suppose one controller may say he is handling 40 branches. In the 40 branches, highest cash handling branches report will be generated by the system and goes to the controller. Why the high cash transactions are happening in that particular branch, he has to verify. And the head office statistics detect the aberrations in the cash transactions. Customer who deposit contain counterfeit notes or forged notes. Counterfeit or forged notes, if at all it is there, the Reserve Bank of India also define. Some other people, they want to use that bad money to, with the help of a financial system, turn into good money. Whenever the counterfeit notes or forged notes are submitted by the customer, we have to take the application, we have to attach the note, and we have to complain to the station house officer nearest to the branch, and subsequent process will be handled by the station house officer. And they will send that note to the new notes of Mathurana Private Limited, either Mysore or Salboni or Nasik or Madhya Pradesh, Devas, and they will inform whether it is a counterfeit notes or forged notes. Then this is also money laundering activity. They are printing the notes and circulated. They converted that the counterfeit or forged notes into then fiat currency. Customer transfer large sums of money from and overseas location with instruments for payment in cash. Why cash? Whenever they are depositing, why not debit it to your account? That's why even Reserve Bank of India also instructed up to that certain amount only cash. Beyond that, that should be routed through the account only, not cash transaction. Large cash deposit night safe facilities, thereby avoiding direct contact with the bank staff. Even bank safe deposit, not only safe deposit, the safe custody articles are also there. Today, safe custody, if at all one bundle is given, the length, the height, the breadth, all these things measured, and volume will be added, volume of the box will be arrived, and we will put in our safe, and we will charge per day rent also. So whenever these boxes are submitted, we have to be cautious, and bank guidelines, RBI guidelines are also there. Now, coming to the Digi lockers. So up to 6 o'clock, sir, whatever the information I will provide. Next class, I will continue the balance. And if requires, I will take one more class because I want to cover most of the things under PMLA so that everybody should have the knowledge of the particular irregular transactions or wrong transactions or bad money transactions like that. So now coming to DigiLockers. DigiLockers is also now banking system is accepted. That is as per the Reserve Bank of India guidelines. But here also some of the people, unscrupulous persons, they are using this system also for bad elements. DigiLockers documents are validity and its validity. Financial organizations increasingly accept the digital papers instead of hard copies, saving trouble of tracking them around and having them vetted or attested, etc. Take the Xerox, attestation, verified with original like that. Even a loan process also, lot of documents are there. All documents over a period of time, even title deeds are also, it can be put it in the Digi lockers. Title deeds of your assets or properties. Today, earlier, everybody knows about shares. Physical shares are there. Now it is in demat form, dematerialized form. So even NSC's National Savings Certificate also on the demat form. But most of the people, they are not using Kisan Vikas Patra in a demat form if they require. Shortly, the bank deposit receipts also. Bank deposit receipts. So only DigiLockers are there. In the DigiLockers, whatever your documents important, all are can be put into the DigiLockers. Now this is also authorized because the government of India is thinking about digital India like that. Financial organizations increasingly accept digital papers instead of hard copies, saving trouble tracking around them and having them vetted or attested, etc. It is easier to open an account, bank account or loan account. Recent master circular on KYC, know your customer, from the banking regulation, financial institution will henceforth accept e-documents issued by the issuing authority. To the customer DigiLockers account for use of KYC procedure. For KYC procedure, DigiLocker, whatever the address proof or PAN card or Aadhaar card, whatever is that particular e-documents are there, that is also accepted. That also banks can accept that documents for opening the accounts. In due course, a lot of changes will happen through DigiLockers. Documents from DigiLockers and its validity. Under Digital India agenda, Minister of Electronics and IT has launched a flagship of a DigiLocker, giving citizens access to real digital papers in their digital document wallet. DigiLocker intends digitally empower them. According to Rule 9 of the Information Technology, preservation and retention of information and intermediates providing digital locker facilities rules 2016, which were notified in February 8, 2017 by GSR number so issued documents stored in DigiLocker are regarded as on par with the original and physical documents. This is on par with the physical documents. whatever their assets and all these things in future, the digital lockers. Digi lockers a variety of advantages to the citizens. Access crucial documents whenever, wherever they are needed, genuine documents that are legally equivalent to originals. Genuinely documents. Genuine documents that are legally and equivalent to the original documents. The exchange digital documents with a citizen consent and a quicker service delivery, and when applying to the government benefits, jobs, financial inclusion, education, healthcare, and other things also. So that's why in future, some of the irregular, there is a scope that they are perceiving by the financial system through DigiLockers also. That's why the Reserve Bank of India given caution to the banks also. Government of India also given caution to the financial system. Currently, 3.73 billion legitimate documents have been issued by the DigiLocker with 33.99 million registered users in India. Issued document in electron documents that have been released by various governmental organizations directly on the original data source. So that this is also a valid document. It is also they used for KYC purpose also as defined by the Reserve Bank of India. Money laundering using investment related transactions. Investment related transactions. Bad money is not only rooted to the banking system, bad money is rooted to the capital market also. Bad money is rooted through the commodities market also. Bad money is rooted to the forex markets in the country also. Because of the various channels that are available for routing the bad money. That's why everywhere the KYC PML guidelines are applicable. Purchasing securities to be held by the institutions in safe custody, which are does not apparent to appropriate given the customer apparent standing. Purchasing of security to be held by the institution in safe custody, which does not appear to be given customer's apparent standing. This type of investments are also happening. Request customers for investment management or administrative services, either foreign currency or securities, where the sources of funds is unclear or not consistent with the customer apparent standing. Suppose up to last year, my net worth is 5 lakhs or 50 lakhs. After 1 year, my net worth or tangible net worth is 50 crores. Within 1 year, without doing anything by Mr. Prasad, how the tangible net worth is turned from 50 lakhs to 50 crores. Some of the people they are telling that is a hard end, we are rich people like that. Okay. If you see the tax returns and compare the current returns, within a short span, how the net worth is increasing. That is also find out by the enforcement directory whenever they have cash hold of the particular person. What is the net worth previously? What is the current net worth? What is the income statement for the last 5 years or 10 years? And what is the present income statement? Why the income is diagonal or not a diagonal, that is vertical. Why sudden rise is there? Large unusual settlement of securities in cash form, and buying and selling of securities without a discriminable purpose or in circumstances which appear unusual, particularly in capital market transactions, securities market transactions, money laundering by offshore international activity. Offshore international activity by particularly offshore transactions are also increasing. In India, one beauty is there, that is trading in foreign currency. That is not there in India. That is called NDF market. NDF means non-deliverable forward market. But Singapore, Malaysia, London, Dubai, Japan, all developed countries, the NDF market is there. Most of the funds, the launderers, they are using the trading in foreign currency instead of trading in shares. Trading in foreign currency is nothing but betting. Even share market is also like that only, but indirectly this is a different one. But foreign currency trading is nothing but betting. In 2019, the Reserve Bank of India allowed NDF trading of foreign currency in India also. First, they have given permission to the banks to trade whatever their surplus funds are there, they can trade in the foreign currency also. And later on, if at all it is succeed, they will give to the corporate, after that individuals, like that. In India, offshore trading, particularly NDF market, is a big market. Most of the corporate individuals, they are trading in foreign exchange through online, through offshore the banking units or other countries, particularly Dubai. MCX is there. The Dubai gold MCX exchange is there. Their trading of foreign currency is also there. They are betting, they are earning crores of rupees. So here, offshore international activity is also more, particularly NDF market. And whatever the money launderers are there, instead of investing the amount in India, and thereby the government will catch hold of through various sources like STR or CTR, etc. They are using these funds in trading of the foreign currency. That is called NDF market. Non-deliverable forward contract is nothing but trading of the foreign currency. So today I will stop here, sir. And next week, with the same time, that is 4 to 6, next series, I will discuss. And in the practice also, particularly CMS practice, what are the latest guidelines, that also I will discuss. If warrants, then I will request the BFSI board for another series also. My objective is to disseminate that information, the total information about the Money Laundering Act, so that everybody should be alert. They should not involved in this activity. They have to save their skin also, because if at all casual approach is there in providing services to the clients, then sometimes we may involve in that process. To avoid or to avert that one, we should be cautious. Knowledge is power. Once you are having the power of the total concept of a PMLA Act, then whenever we are doing our practice, whenever we are providing services to our clients, we should also be cautious in providing services to the clients. So Thank you very much, sir, and good night to all. And whatever the doubts are there, I will discuss in the next class.
So thank you for the deliberations. Uh, I would now request CMA Dipendu Roy, who is Additional Director and HOD of BFSI, to give his vote of thanks.
Thank you, Payal. Good evening to all. We firstly apologize for today's delay at the start of the webinar due to some technical snag. We could not start the webinar at the right time. So we apologize for the delay. Today we organized the webinar on this pertinent topic of prevention of money laundering series 2. We are actually privileged to have a deliberate discussion, and we are thankful to our main faculty, CMA Dr. P. Sivaram Prasad, who is also the former AGM of State Bank of India, for delivering this webinar on this very pertinent topic. We thank our President CMA Ashwin G. Dalwadi sir and CMA BV Nayak, our Vice President of the Institute, and also CMA Chitran Chattopadhyay sir, who is the Chairman of the BFSI Board, and all our members of the BFSI Board for encouraging us to organize these webinars on various topics every week. We also thank CMA Arup Shankar Bagchi, who is the Senior Director and Secretary of the BFSI Board, our team members, CMA Dr. Aditi Dasgupta, Sri Bhavesh Kumar Sinha, Ms. Payal Banerjee, Ms. Suma Chakravarti, Ms. Indrakshi Bhattacharya, and Sri Shantanu Pradhan for their collective efforts. We also thank our IT department for organizing the event in an online forum. We hope that our BFSI department will continue our efforts for knowledge sharing activities in the coming days. Next week, that is 7th of October 2023, we are organizing the last series of this webinar series on Prevention of Money Laundering Act 2002, and we request all to join in our pursuit of knowledge enhancement. Thank you. Over to Payal.
Thank you, sir.
Thank you. Our IT team can close the webinar.